Well, hi, it's Bill Riley with Riley Private Client, and now that we're beginning the full season of fall, we might want to take a look at some situations or the things that have been happening over this last few weeks and kind of go into it a little bit. Previously I've talked about some of the areas of concern I have, and unfortunately, I think I'm right. I mean, inflation is here. Inflation is going to hang around a little longer than they thought. And so that's putting a lot of pressure on the markets. So I want to kind of go over some of that and what I feel like will come out of all this. First of all, the good news is that, Merck has now come up with a pill for the COVID, which is very good news, very, very good news. And I've been reading and studying about it, or getting what research I can. It looks very promising, and that'll put a lot of minds at rest and maybe speed up the reopening. I think that's one of the biggest problems we have right now is there's still fear out there. Even though you may not want to get vaccinated, you don't feel like going out and about very much because you don't know, and it is scary. One thing that I think that if we're going to worry about something, the things we need to worry about going forward is higher inflation data. About October the 13th, we'll have some inflation news. And if it's still skyrocketing like it has been and going up faster than we've seen in a long time, even though it's not historically high, it's still pretty moderate inflation. The problem is we're coming off of almost no inflation to real inflation. That could put a damper on stocks after having a good fourth quarter, because it's very hard to invest when you have inflation going up like that and trying to plan a portfolio or find out where to invest. Because there are some areas of the market that do very well in inflation, and that's some of the things we're looking at. Governor Powell, the Fed governor, kind of started talking a little bit about tapering. If these inflation numbers are higher than we expect, I think that he will speed up the tapering. That means that he won't be buying as many bonds. That doesn't mean rates go up. Tapering is not rates go up. It's more of we're not going to buy as many bonds, and we'd say we're buying just a boatload every month to help support the economy by controlling the bond market. That'll make the bond market run away a little bit, and we'll get higher interest rates, which we're already seeing. Some, not really high, but they're there. Previously when I started talking about this, I told you that I expected some sort of a correction. I thought it would hold around 5 to 6%. Well, we hit 5% last week on the NASDAQ because of the high-flying techs. Inflation is not a good thing for tech stocks, and neither are rising interest rates. So that's kind of caused a little bit of a muddle. Now, it doesn't mean that there's anything wrong with the tech stocks. It just means when you're doing asset allocations, you're looking at for those companies that would profit in inflation or higher rates instead of chasing the grow stocks like we have for the last 2 years. But here, what I'm saying, we may go down 7% before this is over. But remember, normally the market goes down every year from anywhere from 5 to 7%. It's just that with this perfect storm of political mess, I call it, like little kids arguing with each other, not being able to make a decision, not getting things passed that need to be passed, is kind of caused most of us that manage money. Is I have this old theory I was always trained at: when in doubt, stay out. Now, what that means is that when you really can't determine which direction this market is going, which it looks like it's trying to go down some more, you're very careful of what you invest in. And that's the right thing to do. That doesn't mean you should sell what you have, but if fresh money is coming in, you got to be careful what you're doing there and make sure. The key to all of this is this: you need to know what your risk profile is. You need to know how much risk is in your portfolio. Because if you don't, and we do have more of a correction, you're going to take more of a correction. So, we've always offered to run these risk profiles for people on their accounts, and I cannot stress how important that is, so you really know. And you have kind of a comfort zone to know, I'm got some high risk, but it looks like 2022 is going to be good. Once this correction zone is done, the good news is that once these things have happened in the past, then you have a pretty good rally, because what happens is stocks get repriced. This is one of the things I saw on some of the news programs. They're using the term reset. It's a reset. Well, really what it is being repriced, because stocks had got ahead of themselves in various areas. And some of the stocks that ran way, way up should have never been that high anyway. So you're getting a correction that's probably may have some really good entry points for 2022. Now, it doesn't mean we won't have a fourth quarter rally like we usually do. What it means is that we're struggling with so many things happening in the market at one time that it's very hard for stocks to move up. But I think the downside's fairly limited here, maybe 5 or 7%. Now, one of the big things that's really been surprising to me for us to live here in Texas is the natural gas. Natural gas has just exploded, higher than I've ever seen it in a long, long time. Now, that can have a detrimental effect because as we get into winter, that means your heating bill is going to be up. And so you got inflation, you got natural gas prices, electric prices, everything will start to go up, and that will cause some pressure on moderate to lower income because you got to pay for it. Now, will natural gas correct itself? I think it eventually will. I think by January, February, we'll get out of this. But the storms did cause a lot of problems with the natural gas so in the Gulf. Here's where we are. Something's got to get done for Biden to really have any kind of a meaningful presidential term. He's got midterm elections coming up. And if he doesn't get something solved in this and get something passed, this is going to look very bad. Because the Democrats that are up for vote to be reelected, it's going to be a tough call to go back to your constituents and, their gas bills are up, inflation's up, and all these other things. Try to explain that away. That's very tough to do when you say, why didn't you get it passed? And it's being held up by, I think, people that have more of a, let's say, personal interest and profits instead of what's best for the government. So what I'm going to do here is kind of close. I think that we just need to be patient and let this thing work itself through. September's always a bad month. Don't kid yourself. But I think we're starting to work our way out of it, and I think things are repricing, I call it. And there could be some very good buys here. But if you're in high quality stuff, you know what your risk profile is, and you know that, my account could go down this much, but it could also go up this much, then you're going to have a lot more comfortable way of investing, especially if you're in retirement. So thank you very much for your time. I hope this was helpful. I know that it's very hard to kind of get what I call a handle on what's happening because there's so many moving parts. But eventually all these things work out. Remember, the market goes up 77% of the time. So let's just kind of sit back, not get too excited, and see where all this plays out. Thank you very much, and I'll sign off now, and thank you for listening. Bye-bye.